In today's December Canadian real estate update, we are discussing the common thread amongst all the real estate markets seemingly in November. We're discussing how Canada doesn't have a single city in the top 10 most expensive cities in the world. And we're discussing why there won't be a GameStop style collapse in the Canadian real estate market.
The definitive guide on how to manage your credit. Product, penalty, price in that order. It's never been more important to get your mortgage right.
Okay, so welcome back. In today's December Canadian real estate update, we have a whole bunch of things to talk about. We're going to talk about three main cities, Calgary, Vancouver, and Toronto. We're going to talk about how Canada doesn't have a city ranking in the top 10 most expensive cities in the world. And we're going to talk about why a GameStop style collapse isn't something that we need to worry about in Canada's real estate market, although a correction is certainly something that we need to worry about. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where when we hit 25,000 subscribers, we're going to give one lucky winner $5,000 to put towards their down payment, maybe a home purchase, maybe to help pay off their mortgage or other debts, or simply to invest. But in order to win, you have to be subscribed. So go ahead, click that subscribe button. It's free, it's easy, it's definitely worth it. So let's get into it. Let's discuss what's going on in the Canadian real estate market right now. I'm going to pop you right into my screen and show you exactly what's going on in the headlines. We're going to start right out of the gate with the Bank of Canada acknowledging that investors are raising the risk profile of Canadian real estate. However, they are not the enemy. In a democracy, in a capitalist society, they are just trying to make a living, and they really aren't moving the needle as much as most people think with respect to how much they're increasing the value of home prices. Yes, they're taking some inventory off of the market. However, they aren't having a massive effect. But what's really interesting is my friend here from Rate Spy, who is a frequent commentator on the Globe and Mail and the Financial Post and on BNN and Bloomberg. This is Rob McLister, somebody I know well that I've worked with for quite a while at different companies. And he's saying that the Canadian real estate market could head for a GameStop style crash if investors become spooked and rush out of the market. So I love Rob. I often agree with him, sometimes disagree with him. Everyone's entitled to their own opinion, right? And that is certainly his opinion. It's something that he's said here. I think there's something that needs to be made clear about a GameStop style crash is GameStop stocks, AMC, any sort of stock that you deal with, or even Bitcoin for that matter, they're all what's called liquid assets. They're things that you can offload easily. You can go in, click of a button, sell your GameStop stock. And not only that, but a ton of people can do it all at once. And that can lead to a market crash fairly quickly. Housing, on the other hand, is less of a liquid option. And in fact, it's considered an illiquid asset. And therefore, it takes some time for things that happen in the market to filter through. And seeing an all-in-one crash is something that is probably not something we're going to see in the near future, unless something happens like in 2007, 2008, where there was a liquidity crisis, or lending becomes something that tightens up and it becomes significantly harder to get a mortgage. Basically, if the ability to buy goes away, that's where you potentially see a real estate market crash. So, it's usually a hampering of the ability to buy that creates a crash, not necessarily a bunch of people all deciding at once that they are going to get rid of properties. Now, that can have a lessening effect, a dampening effect. Yeah, you can see corrections when people decide to exit the market on a very quick basis. But for the most part, you need to have something bigger than just a whole bunch of people deciding to sell to see a massive collapse in the economy. So, or in the real estate market, I should say. So that's the first thing I wanted to point out. Second topic today in our Canadian real estate update, I wanted to show you this article from The Economist, which is kind of in contrast to the Oxford study that we talked about last week. The Economist does basically a most expensive cities report or survey every single year. This report is typically used by big companies in order to help determine what wages should be when moving people from one city to another. You can buy the report. It costs like $1,000. Human resources tend to purchase it. It's hard to get to the actual data to figure out where Canadian cities lie in this. But what's interesting is, in contrast to the Oxford study, which we looked at last week, where Vancouver was the most expensive city in Canada, in North America for that matter, what we're seeing here is that from a worldwide perspective, New York and Los Angeles, American cities, are ranking as more expensive than the Canadian cities. So what's happening here? Why is this happening? Well, okay, what you need to understand about the Oxford study is the Oxford study was an affordability study. So what they did is they used incomes and then they used qualifying ratios to determine the incomes versus the cost of living in those cities, and therefore were able to determine which were the least affordable and most affordable cities. That's why Vancouver ranked the highest, because their incomes relative to their home prices are fairly low compared to other cities like Manhattan, where home prices are significantly more, cost of living is more, but incomes are more in line with what the actual costs are. Same thing with LA. So the Economist, on the other hand, they're doing a pure how expensive is it to live in that city. They aren't looking at incomes, they're just looking at the cost to buy groceries, the cost to live, the cost of transportation, the cost of housing. And they're just saying here on a flatline perspective, what is the most expensive city to live in, and not factoring in the dollars and the cents of the actual incomes of the people that live in those cities. So that's why you're seeing a discrepancy here. Now, moving on to our next subject, and we're going to move Vancouver over here and take a look at it first. There's a common thread happening in the Canadian real estate market in November. There's actually two common threads. The first is record numbers of sales for November. That has been common in the three major cities that we're going to talk about today, which are Vancouver, Calgary, and Toronto. And the other thing is low amounts of listings. And anytime we see high numbers of sales, low number of listings, we're in for higher prices. So there's some speculation as to why this is happening. I mean, I think the low number of listings has to do with people who have already have bought, and they are holding on to their properties. And you're probably going to see a 3 to 5 year lifespan before they start looking at putting those properties on the market. A lot of people bought in the last 2 years, and therefore those listings are not going to come available for quite some time. The other thing that we're seeing potentially is people trying to take advantage of the rate holds. So people typically who apply for mortgages have 90 to 120 day rate holds. And what some economists, including Anne-Marie Lowry in Calgary, are suggesting is that they're trying to beat the market, or try to beat the expiration of their rate holds, so that they can purchase with the lower rates that they were able to hold in September or October. Now that could be it. It could just be people are in the market and in the mood to buy. I'm not sure exactly what's happening, but I think it's probably more to do with just the general sense of continued higher prices, which can become a self-fulfilling prophecy, where when people believe that real estate prices are going to go up, they continue to go up even beyond the fundamentals until something cracks and eventually people can no longer afford those properties and the buyer pool runs out. So really interesting things happening here. Vancouver, I want to talk about first because they set a brand new record. They finally crossed $1.2 million for the average home price, which is insane. Last month when I did the real estate update, I accidentally said 2 million. That was wrong. They were approaching 1.2 million. They were just shy of it by about $1,000 this month. They crossed that $1.2 million threshold. And it looks as though if inventories are low, they could continue to go higher and higher. It's going to be interesting to watch the numbers in January, February, March, and see what the inventory numbers look like then. Because if the inventory numbers remain low, even if there isn't a ton of buyers out there, and even if interest rates start to go up, we could see even higher prices in January, February, March, April, right through till June. Same story in Toronto. Toronto home prices post another record-breaking month, both in respect to the average price and with respect to the number of sales. 9,000 properties changing hands for making a record for the month. Down slightly from October, I believe, but again, another huge month for Toronto real estate. And again, supply issues are the trend in the entire world right now, whether it's you're buying goods or whether you're trying to buy houses. There just doesn't seem to be a ton of supply right now, and that is true for the Vancouver and the Toronto real estate markets. Calgary home sales soar 47% as buyers race to beat rate hikes. Now, Calgary is deemed as a very affordable city right now, with basically people only buying at 70% of their capacity right now. So really interesting that a ton of people are flocking into the market. We always say Calgary kind of floats behind Toronto and Vancouver real estate when the market's going up. The other big thing to keep in mind here is the oil prices have gone up significantly. That's always a good thing for the prairie provinces, and that is reflecting in people's buying preferences. I suspect that in 2022, regardless of where interest rates go, we're going to see a pretty significant run up in prices in Calgary and Edmonton, because there's a lot of room for them to catch other cities in Canada, and there is a lot of extra money laying around. so to speak, for people to actually make those purchases and afford bigger homes. Now, one thing that we're seeing here is we're seeing different economic reports. This one's out of Capital Economics. Home price gains will slow sharply in 2022. I think as you see interest rates go up, yes, you absolutely are going to see home prices start to slow with respect to growth. So the speed at which they're going up is going to decelerate as housing prices, as interest rates start to go up. I think that is absolutely 100% true. What's going to be interesting is for some of these markets that have lagged to see if those interest rates make a big difference. Because if you go back to February of 2020, interest rates were around 3.7%. It's still going to be very much plausible that even if you see 5 to 6 rate hikes over the next 2 years, we're still going to be at interest rates that are lower than what they were pre-pandemic. So if interest rates were to go up 1.5%, we're going to see basically prime at 3.95%, and we're going to see a lot of people still paying under 3% for a mortgage, which is still lower than what it was in February 2020. So there's some interesting conversations here. There's some interesting economic factors at play. You know, we thought that the housing market would cool in the fall. It clearly has not. It still continues to rise. And if history is any sort of indication, it still could continue to rise in the spring market. And by the way, I saw a really great video on here. I will do my best to link it in the description below. Realtor from Surrey posted a video about the best time to list your house. He's pointing to basically January 5th as being the best day to list your house because there will be less supply and still some demand from buyers. Obviously, people take their houses off the market in December because they don't want to be bothered during Christmas, and that leads to low supply typically leading into January. And he's suggesting that January 5th is the time to list your properties. I'm going to link to that because it is a really great video by a really great realtor in Surrey. So hopefully you tune into that as well. If you found this video useful, the Canadian mortgage update for December, do me that favor. Hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. Don't forget about that race to 25,000 subscribers. And you can join our Homebuyer Bootcamp if you're looking to get into the market to become one of the most informed buyers in Canada when it comes to buying a house. Just go to the link in the description below and we'll see you on the very next video. Cheers.